Wait, Bitcoin is rallying again, and find out why this move is more stable than the last one, and plus, why the stock market will go back to the 5,800 level soon, and lastly, why PLTR might be the next NVIDIA. Bitcoin is well over 100,000 and could hit 150 to 200,000 during this cycle. Here's a clip of Tom Lee explaining the details of how this Bitcoin move will also power the S&P 500.
Yes, I think new highs are possible this year. I mean, one reason is, companies have proven themselves to manage through shocks, and I don't think investors give them enough credit. That happened with COVID. Companies survived. Companies survived a bullwhip effect on the economy. They survived a surge in inflation. They survived the Fed hiking at the fastest rate ever. So I think this tariff shock, while it is shocking, I think earnings will probably outperform expectations. I mean, that'd be one thing. And then I think the things that were leading us down, whether it's Tesla or the Mag 7 or Bitcoin, they've begun to recover. In fact, as you know, Bitcoin's above its April 2nd level. So Bitcoin, I think, is telling us the S&P should recover towards the 5,800 level in the near term, and that's still upside from here.
Yeah, that was another one of your calls, that it would catch up with gold, and it's lagged in the past. What about some of your good calls or accurate calls, Tom, have been based on inflation, and it's a real sort of a push and pull between what we're worried about with tariffs, which would theoretically restart inflation, even if I don't know if restart's the right word. Maybe there is some still left in the pipeline. But oil, I just always think that the most important factor in inflation, which ripples through everything, is oil. And you look at oil, and I think that could counteract a lot of what we see, maybe even not only offset the tariff inflation, but actually be more important. So what's the Fed do?
Well, I agree with you, Joe. I mean, the two leading indicators for inflation should be, like you said, commodities, and oil is telling us inflation is weaker. And the labor market, the JOLTS data shows the job market's not that strong, so there's not really a wage pushing inflation. And I think the inflation data recently shows inflation is tracking lower than expected. The Fed has been on hold, and they're saying they're waiting for tariffs. But what's interesting is the ECB has been cutting rates, even though there's tariffs, inflation hitting Europe, or soon to hit Europe. The reason is ECB's inflation measure, the HICP, exclude shelter. If the Fed excluded shelter from its core inflation calculation, it's lower than Europe now, and yet Fed funds is over 225 basis points tighter than Europe. So I can actually sympathize with the argument the Fed should be cutting now, even if we don't know the effects of the tariffs.
More than 50 million Americans hold some form of cryptocurrency. This digitalization of financial services is not a trend. It is a transformation. Here at the Office of the Comptroller of the Currency, we've confirmed that national banks and federal savings associations may engage in certain cryptocurrency activities responsibly in order to serve their customers. OCC-regulated banks may provide custody services, including the safekeeping and secure storage of cryptocurrencies and other digital assets, all on behalf of their customers. The banks we supervise also may buy and sell cryptocurrencies they hold in custody at their customers' direction. Additionally, these banks may provide other custody services, including record keeping, tax, or reporting services for their customers. OCC banks may use a sub-custodian to provide the same services, subject to appropriate third-party risk management practices. While a range of cryptocurrency and digital asset activities may be performed by banks and their third parties, I want to be clear that the OCC expects these activities to be conducted in a safe and sound manner and in compliance with applicable law. To learn more, please visit occ.gov.
One of the most important things to keep in mind is if you just look at Bitcoin, it doesn't matter, right? Bitcoin doesn't care. It's back in the six figures with a lot of room to go. If you compare its primary functional use case, which is actually a check and a balance on the lack of accountability in fiat unit creation, we still have a long way to go. So gold is a 20 trillion market cap. Bitcoin is still 2 trillion despite functional superiority to gold. It's much harder to steal. much easier to store, much easier to instantly transport, and more importantly, you can actually audit it. So I don't know if you saw, but there's an estimate that said that auditing Fort Knox would take 44,000 hours and approximately 18 months to complete. I think it'd be a lot nicer for the American people if they could just go to a handful of auditable Bitcoin addresses on a blockchain explorer and see exactly where the American people's Bitcoin is.
Well, we have seen just incredible growth, and I think it hit an all-time high yesterday, so we feel very good about that. But I think over time we'll see Bitcoin get into the millions, multiple millions of price range. I mean, it's being adopted by more and more institutional customers. The ETFs brought in a huge amount of inflow. If we get clear legislation passed in the U.S., that would be a big milestone. A strategic Bitcoin reserve. If the U.S. took that path, probably the rest of the G20 would follow. In fact, I've discussed with a number of finance ministers here in Switzerland from different countries around the world, just the idea of a strategic Bitcoin reserve. They're getting more interested in it now because the U.S. is looking into it. So I think Bitcoin has a long way to go. It's going to be the new gold standard out there. And crypto is really much bigger than that, too. It's about payments.
Yes, so we have always had a 2030 target, the base case in the 700 to 750,000 range, the bull case in the $1.5 million range. David Puel, our analyst and our on-chain analyst, put that piece out recently, and you can see the building blocks, how much share we expect Bitcoin to either take from gold or grow that store of value market. Institutions moving in, and they've barely moved in. We have 1 million more coins, roughly, to be minted ever. And institutions are just testing the waters right now. And then there's the emerging market use case as well. So we think we have miles to go, yes.
Now, let's take a look into Palantir. Over the past 12 months, Palantir have quadrupled, and I remember recommending my followers to do some research and see if it was a great fit for their portfolio at around $33 per share, and it recently hit $125 per share. I also feel like the wave around NVIDIA has slowed down a bit, and now investors need a new AI darling to push, and it seems like Palantir might be the best fit for that. According to this article from Wall Street Journal titled Palantir Technology Raised Outlook on Continued AI Demand, Palantir raised its full-year outlook after logging in higher profit and revenue in the first quarter, fueled by continued demand for its artificial intelligence product. According to the CEO, Alex Karp, Palantir is on fire, said Monday on a conference call, adding that the company is benefiting from the shift towards the adoption of its software, which manage and analyze large amount of data. We're very, very optimistic about what's going on, he said. Enthusiasm for Palantir has accelerated following President Trump's election, as his administration alliance with the tech mogul such as Elon Musk has expectation that more Pentagon contracts will be awarded to non-traditional defense tech vendors. Palantir revenue jumped 39% to $883.9 million, ahead of the $862.2 million that analysts modeled. That's it for today, folks. Don't forget to like and subscribe and leave a comment below. Thank you for tuning in, and see you next time.